Okay, we said it at the start of the year, but it bears repeating right now. 2021 is shaping up to be one of the most significant years possibly in stock market history. And I spend a little bit of time this month just talking about some of the cross currents that are going on, right? On the one hand, we see bullish sentiment extremes just about everywhere. And on the other hand, we see some of these early signs of the coming reversal. And we see those signals in collapses like Greensill Capital, right? This is a company that was worth $7 billion as recently as last year. Over the span of 1 week last month, the entire company goes bankrupt. We saw the same thing this week with Archegos, right? This is a little known hedge fund. Turns out it was highly leveraged into a handful of stocks. A margin call happens this week, and those ripple effects are now hitting global investment banks. And we don't really know how far the fallout will go yet, right? But this profile, and I'm sure no one here needs to be reminded, this profile takes us right back to those two hedge funds that collapsed at Bear Stearns. That was back in June of 2007. Back then, markets were also near a peak, and most experts thought that those blowups were contained. But in reality, they were leading directly to the '08 financial crisis. So there's a lot to be said on these issues. There's a lot of connections to be made that I don't think the media is making. And so I'll spend a good bit of time making those connections for subscribers. But we cannot ignore the credit markets because the danger that lurks in credit right now may be even more extreme than that in equities. And here too, despite a rise in interest rates, there's gauges of bond market optimism that remain at multi-year extremes. And I show a version of a chart this month that was published in the Financial Times. It really does a good job at illustrating just how extreme the demand for sovereign debt has become, not just in safer countries like Germany, but in Spain, in Italy, in Greece, right, which was effectively locked out of the credit markets a decade ago. This massive demand remains even though interest rates are rising. And so something has to give here, and we'll get into exactly what we think that is and what stands on the horizon for credit market. So again, this is an exciting juncture both for equities and for bonds. It may not seem that way on the surface, but once we start to do a little digging, it should become crystal clear why 2021 is shaping up to be such a hugely pivotal year.